Hey, what's up, everybody? It is April, no, it's May 15th, 2025. And it's another Wednesday coaching call or a Thursday coaching call. They say repetition is the mother of skill, but sometimes if you do the same thing over and over and over again, it's what's the right word? It becomes almost flowing in a sense. I'm not saying the execution of this is always perfect because there's always that energy of will this work out or not? Press the button. It's just cortisol, right? But you can see how here for SUI, pretty much it live in the channel. I've been calling this word, even though when this broke, it looked really scary. Oh my God, is this going to fail? No, right? If I only zoomed in on this time frame, it looks like a balanced breakdown pattern, right? But if I zoom out on a larger time frame, all this is simply the second leg up and a pullback continuation pattern for SUI. Now, when this came up here and you saw these two selling tails, right? In the context of doing that at this key reference area, which is a very key swing high, which is essentially right this balanced, and then it broke down, and then it retested that breakdown area, and then we were in a bear market for a long time. You should expect a tradable reaction. In fact, if you were, and I see this now in terms of even though on my larger time frame bias is bullish, and you see in the channel I mentioned a short setup. But the idea is that even though I want to go with the trend, I can differentiate between, okay, well, this is a setup where I'm going to use a quad exit to position or swing trade it because I want to go with the larger time frame bias. Or is this going to be some type of an income, just short-term day trade or scalp because, moves in a series of thrust corrections. And, from here to down here is a decent amount, right? So if this was Bitcoin, right? I'm not saying you have to go on the futures for SUI, but that's the idea. So I mentioned yesterday that there would be a pullback continuation pattern in the channel, right? That was the bigger picture pattern, which is part of my daily call system, is that one leg up, pullback, two leg up, right? This pattern is a bigger picture pullback continuation pattern. We're in a bullish, larger time frame bias, but I could expect a big pullback because we were at this zone. Now, I also mentioned that we could expect a steeper pullback. That's why I didn't trade yesterday for Bitcoin. But I did give signals today live when we got deeper into this zone, right? And once we were deeper into that zone, hang on a second, my dogs are going nuts. One sec. All right, boys. So once we were deeper into that zone, that pullback continuation pattern manifests. Now it takes a lot of guts to when you wake up after I said, "Hey, there's going to be a bullish CCI tomorrow," that everything else is red. Right now, I'm not discounting that. That's a real time thing. The other markets were bearish, the intraday bias was bearish, and the sustained momentum was down. But the bigger picture, top down stuff that I just previously mentioned was up. So once it got at least a good enough trade location, there was an opportunity here. Of course, there's always ways to get a lower risk entry. Right. Tomorrow we can get a confirmed day. But this is, because of this zero line reject and the separation between the blue turbo and the yellow CCI over the zero, that's showing that this momentum is, at least the downside momentum is suspect. Not that I even needed that because if you just look at this pattern is smaller than this pattern, right? So, this time frame is down, right? But these time frames are up and then they catch each other and then we go up. So yeah, that's the idea. So that's the idea of a neutral bullish larger time frame bias. A bullish larger time frame bias is that you really only are going long, but a neutral bullish is such that you can take shorts at good trade location, understanding that they're day trades, or rather not going to be reversals down to $2. Like it's lower odds now for Bitcoin to get to 76. And I mentioned why that was yesterday because it's not just levels and it's not just resistance. It's how things got there and how they're reacting. What's the story? What's the maturity? What's the time factor? And you can see right here, there was a shoulder, a head, and another shoulder, and that's called an inverse head and shoulder, right? Because it's upside down, and that's a bullish pattern. The way we got there was bullish, and then fractalizing within that, we have a trend, right? We have one leg up, two leg bullish leg counts. We have bullish larger time frame bias within that bigger picture pattern, which are two separate categories, and we have basically an expected reaction at this resistance zone. But remember, I kept this resistance zone as well because broken resistance is support and broken support is resistance. So I'm not surprised that we're getting shallower pullbacks because this is a decent support. now support zone because it was a pretty strong resistance zone that we completely invalidated, which is extremely bullish. But that doesn't mean that it's now not going to be this broken resistance now going to be support because it's helping balance the strength of this. Now, I don't expect this to now then go squiggly line all the way down and then create a super mature balance. I mean, I'm open to any possibility because the number one principle is that anything can happen, but I'm very confident that that's a low probability event. Everything is suggesting that this is going to be a bigger picture bounce breakout pattern, right? All it needs is just one thing here, right, to catch people off guard. And because of the maturity of this, it has much greater odds now not to be some kind of false. This relatively speaking, is not that mature, right? Look how big this was up, and it's just not mature. You needed something very mature, right, to break out. Now this is just a nice time factor maturity, but this has nice magnitude of move maturity in the way it got there, right? So it's not just the time factor, it's the magnitude of move and also the story of how it got there. So we have a strong time factor, decent time factor, and magnitude of move extended down. Not that great, okay, but you can expect a deeper one now that we're up higher. This is really looking good for a solid breakout. Now what we got to do now, and that's why I said it's even though even when I said when the larger time frame bias is bullish, even though you're gonna have some red days, don't get shooken out by it. This is just a process. Your day trading. So now if we zoom out to a larger time frame on the weekly here, right? I've been talking about this date for a long time in the channel, guys. This is our weekly decode. I'll just tell you what it is. It's 30 weeks. Once this stuff becomes very easy, once you can, someone gives it to you, but it is 30 weeks. And we combine that with these giant phases of the market, namely that the market's moving in a series like sideways, then down, then sideways, then up, then sideways, then down, then up. They never go up, 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 then down, down, down. Very rare. There's always thrusts and corrections. And this time cycle here, right? Very nice. I mean, this is exactly what I wanted to happen. I wanted this to be like a double bottom kind of a thing around this date, right? The maturity of it, the breakdown, right? And I was thinking, okay, well, if it failed here, then this will extend longer a little bit. I didn't think it was going to break down to here, but this is what I wanted. A swift, like we have directional conviction now. You see the strength of it. These candlesticks look similar to these candlesticks, and you want that when you start a move out of here. Shoulder, head, right? Now we could come up here and then like I have this already planned out. I have two scenarios, right? The lowest scenario is that if I could just clone this green candle, is that we just have another green candle coming up soon. Like after this week closes. And then what I think most likely will happen is that so that's the lowest scenario. The second lowest scenario is that we get this wide one right here, similar to this. I think the highest scenario is we get this one, right? It's just going to be more like this one. And then something out. This would take us, yeah, I mean, up here, maybe a little overshoot, right? June into June, everyone's, oh my God, it's not. And then, we're getting to summer, we get that thing. Something like that. It doesn't have to be could even be smaller. But I clone this just to think in scenarios and being prepared, because if I wasn't prepared with this pullback continuation pattern today, I wouldn't been able to, see it clearly because it looked really terrible coming down into this, but this was a zone that I already had planned out. I said, if it came down again here today, I'm going to go long. Now I wanted it to be overshooting here. I have a runner from along here. Now I could have cashed out, but it's only 12.5%. I don't care. It's like a shit gamble. It's something that's like, oh, well, if it breaks out, I'm okay. I don't have to always have something. It's not necessarily always for the psychology of someone who likes to get in and out, because technically you could have shorted this, right? If you're really focusing on this, it takes a lot of energy to stay up night. I'm refused, my health comes first. I'm not going to be staying up all night trying to catch everything, but there might be a mode where I start doing that because you can build up capital quick by getting these moves, or you can kind of step out a little bit and go with the larger time frame bias like I'm doing with SUI and with Bitcoin here with these two entries that I gave. And then there was a re-entry today. And I said basically, hey, this was a re-entry here today, but you could always wait for a pause day, right? Because I thought this had low odds that this was just going to go all the way up here, but this was a good move. It's just that it's just going to be higher odds in terms of the breadth of the market if we can get sort of a sideways day today, and then we can get something tomorrow uh, to balance it out. Now, yeah, you can see this. I had this zone here, right? This was I almost reloaded hardcore into this, but I'm already in this anyway from a previous trade that I have a lot on. But this was technically 100% a signal. I just should have went into the flow state and just took it again. I didn't draw that zone after that zone's been there for a long time. I've been planning that zone. I imagined going in there if it bottom built there and it went into it. And I just was like, I'm like, I had a couple winners today. It's a little too, it was basically just an emotional thing because I kept looking at the red of the market, which, like I said other markets and all that, looking at what the other markets are doing, looking at how bearish everything is in terms of sustained momentum and the intraday bias, who's in control of the day. That's all fine and farewell, but it still didn't validate those higher time frame things. It is tough. I'm not saying like in hindsight, oh, whatever, but yeah, this was definitely a zone where it made sense to go long, and we got a decent move out of it. But I'm more psychologically prepared to be more aggressive tomorrow, and that's kind of what I said. So it's like I'm fine with missing moves that aren't part of my trade plan because this bottom building technically wasn't even in, and I would like it to be penetrating this zone because this is where we got that really nice action reaction. We could see it was close enough. So this is where that contextual analysis, you might say, well, where was your stop? Did you really have it this wide? Well, if it was this wide, it would be a little bit too big for my taste because if I'm getting in here, right, if it's going to be even a 1% move, it's going to be a little over 1,000 points right now. So do I really want to risk? I could basically break this up. I do a lot of these things called 2R trades. So I'm looking at this as a double bottom here, right? And I'm taking the stop into the next zone here underneath this swing, meaning that if this gets stopped out, I have a resting order already to go long again here, and I have another stop here. So I have an independent trade here with a smaller stop and an independent trade here with a smaller stop. It mathematically works the same because it's like if I had a wide stop, it's the same amount of loss, but it actually gives you two independent trades. Basically, instead of risking, a 2R trade, or essentially this is a 1R because it's still less than 2%, but it's a half R each, really. And you can see the first one worked out. I didn't need to now if I did it with just a wide stop below the zone, I would have had basically a really bad risk reward ratio on that trade, in my opinion, because basically how heavy the other markets were, what was I going to get out of this really? If I take a wide stop here, even just getting up to the VWAP is not even 1-to-1. And you know what? We got a little bit higher than I even thought we were going to be because of how bearish the bias was just as a daily thing. So when it got up here, when I said, hey, you can take this, but I'm personally more conservative than you guys, but this was a system signal. That's when I do that. I don't do that like it's areas like I'm flat out saying, hey, don't take this. The system's against it. But sometimes this is a lower quality trade. But the exit was pretty clear to me. That's why I said take half off this one or leave 12 and a half because getting up here was just an extreme. This is the high extreme of the day. This is a key reference area. I mean, I could put technically, I used to draw every single zone, but I only draw the zones on the plan that I'm going to today to make it less confusing for everybody myself. But in my mind, I already know that's a zone up there because technically this was the high of the day, this little one here. And then you'd have, the next day's high and then these guys. And that's it. And then we got it. But like I said, all this is the intraday stuff. Where are we really cyclically? We're right where we need to be, but this is actually a key. This is the resistance area. So beauty principles that we're going to go sideways now because we just had an up phase, but everything is suggesting that we are ready to go into the next balance breakout, which would take us up to 132. That's conservative. 132,000 is conservative. Now, like how I had, this is the low scenarios that we go back down, or that one, but also that we break out immediately. It only like I love that Irish guy who always talks, or the Scottish, whatever. He's always the floor trader who always talks like it only takes one idiot to ruin your brilliant idea. So that's why you have to be nimble in your thinking. And I really would like to be wrong here because I'm investing too, right? If this just breaks out, well, then the unexpected happened. That's my lower probability could happen. But then that changes everything, right? And that would be great too. So that means that up here, right? I'm not timing this like, the next leg here. Then if we get up here, then it's like, this is the resistance zone for the next time. And then we might get that last leg up into the new year, into 26, like a lot of folks are predicting. That's why I had this I moved these, but eventually I had these. I don't want to do too many predictions like that. There's enough folks doing that. I moment by moment, there's a story being told, and they're even though I do this every day, these signals are just as relevant for my portfolio long term as they are for the. I don't really see a difference between a day trade and a buy and hold, and every time frame in between. It's just whatever time frame you're trading on. So, and what the point of the capital is, you can't have an income producing trade if you're just a portfolio guy. It just doesn't, you have to take profits regularly. So you have to switch your risk reward and do all those other things. Most folks don't want to do it. Um, I can make a zone now up here because it's technically, this particular one and that. So that we got that zone there. And right, it's about being patient up here, right? So it's like once we were getting aggressive at these areas, which I had planned into this zone, we're letting our runners run, and every pullback we're letting runners run. And this was technically an entry again, but every leg up is a little bit more risky. It takes a lot of balls. And I had this planned out ahead of time. This was basically a pullback with a nice zero line reject into a key reference area, right? The context has to behave within a key reference area. That's really the main difference between me and Kobe is that I use key reference areas and seeing how it behaves. Now that it's into that, right? That's how it's behaving. That's better than if it just made a buying tail. And there wasn't this basically what I see this pattern to be is that we had a balance from here to here, right? And now we've had a balanced breakout pattern that is pulled back into it, but not invalidating it because it's expected contextually, because we just had a very key swing high resistance zone that launched us all the way down here. And that's a major resistance zone. But look at the shallow pullback in the context of how strong it is. That's bullish, right? Even though we can expect a reaction on first test, we're advanced thinkers and traders here. So we say contextually, okay, the shallow pullback of it is now, right? And if you had, when I gave this, the buyers could step in here, but I didn't have the balls to actually put on more capital. I'm basically giving a signal if someone did miss all this and does have balls to go in because it is a signal. If you just let go and constantly go into it, the emotions wouldn't affect it. That takes a lot. It's going to take me a lot longer to do that, and it might be something that would have to do after like some serious meditation, some flow state where I let go of some of the stress that happens when you put on risk every single time. Because but you can see that it's telling a story well, and how these probabilities stack up. Right, we've pulled back into this bounce. Now we've had the action reaction. This is a buying tail. It makes, let's say we closed here, then longs become easier on double bottoms the next day. This is a confirmed. It took a lot of balls to go in on this, even though I had this strong. I gave the signal right when this was touching before it popped up. Because if you were just looking at all these other things and not doing a probability calculation scale, a gradient, you wouldn't have the understanding that that was an actual entry. You would just be weighting all this stuff, which is definitely a weight that I'm not ignoring. It was not easy to go against all this stuff. And you can see that, let's be honest, the Bears have won today for overall. But look, I mean, who wouldn't want to be in on this move? This is a huge move. If you wanted to get in on the SUI, and a decent move on Bitcoin too. So, um, and I might even recant what I said about, yes, overall the Bears have won on the day if we were closing right around now around here. But in terms of Bitcoin, it's more neutral, right? I mean, it's essentially a doji day, right? If we closed here, which means tomorrow is going to have better odds for long entries because even though yesterday this was developing as a zero line reject, it needs to mature a little bit. And we got it. And you can just see that SUI is just so strong that it's mirroring Bitcoin 100% because it's a higher beta. It's going to get, better returns. Look at the separation. You can expect more. It's more volatile. It's going to go down a lot more, but it's got a lot more upside. I mean, I can't think of another alt that's mirroring it as well. I mean, it even looks stronger than Ethereum. Ethereum doesn't even look as comparable to Bitcoin as SUI does. So it's looking really good. So I hope people pick that up. And let's go to Cetus. Cetus is kind of even a more volatile SUI, and that's also mirroring SUI. I'm just going to just look around at the market. I talked about DOT. I gave a signal here for people. I don't know if there's any fans at DOT. I think a lot of these old coins people hate, but is it really old if you're just starting out and this thing's got an ETF coming out? I mean, it was at $56. It doesn't have the excitement of a SUI, so I would go with like a SUI over that. But, in terms of just, SUI is moved pretty good, right? It's near its highs. Just this is just one basic principle, and dots at $4, and its highs are at 55. You don't really see it happening, but once things start moving, see, let me get rid of this thing. I don't know why it's even there, but it'd be nice if this pullback is kind of this, you know, this happened around, yeah, this was right around before Christmas, right? We had that fake bull run. And it got pretty good. I mean, it got to 11 something, December 24. And even if your goal isn't, $4, even if you don't believe in the 55 thesis, I mean, it's not, this isn't a bad target from 4 to 11, 4 to 10, talking like 2.5, 3R. It's pretty good if you want to position trade on a dot. Now, what made an insane bull run, I didn't have any, but I started to really FOMO into this one. I got a client into this one last time, was this coin called KSM. It's sort of like it's a beta play to dot. It's dots testnet. SUI is CETUS is the beta play to SUI, and KSM is the beta play to dot. And this coin is at $19, and I believe, and let's see, it got to 629. So that's pretty crazy. It's just the belief, the sentiment, you would never think how this will never get back to this, but there's something happens. Or I wish I had more data on this. This is a Binance one, so really wasn't around prior to this, as far as I understand. Something just, it was the time, it was Bitcoin and these new projects, and it just, you could see it. Just once cash flow comes into this thing, it's just a different look at the pace, look at the direction and the strength of the candles. We really haven't had that. But just remember, guys, adamantly take profits. I mean, look at this. This was May 19th, the most brutal. We're talking 623 down to 100. Like, be careful. I've made a lot of money, and I gave great signals for everybody on this coin called Tensor, right? Let's go to the daily on that one. This is a perfect example. Be careful who you spend your time with in terms of crowds, because to learn about these different opportunities in these microcaps, you do have to go into some of these channels or talk to fundamentalists. Now, my fundamentalists got me into this, but at the same time, in some of these rooms that I'm in, were really kind of ribbing me a bit about, oh, Matt's just scared, blah, blah, blah. Yeah, I am. I was. And I'm glad I was scared because that's cash in the bank. I got scared up here, guys. It's not a bad place to get scared because this coin's absolute trash right now if you're holding through it, right? And I mean, I even got too excited and reloaded a little bit too soon, making the mistake that, yes, we're still in a down market, but we didn't go through the sideways phase yet and didn't match up to Bitcoin. Don't get into this thing where like this coin was up here and it's still good. Oh my God, it's at a discount, because that's what just DCA guys do. Yes, eventually they'll make out. I think this coin's going to eventually get back. It's still in process. But why do I need to sit through this pain? Now, I didn't reload a huge amount on this, but it's just like, that was just a rookie mistake. That was me FOMOing in. And, I think even at one point, somebody was talking about even getting in on this buying tail. It's like, once you break so much structure, even if you have a strong action reaction in the short term, you got to think, okay, markets usually don't go in an up phase and then a down phase, and now we're going to go up. They usually go in an up phase and usually a sideways phase, then down. But this was actually, remember I said all trends end in balances and all balances end in trend? Yes, it is 100% true that all balances end in trend, but it's only most of the time, like 90 to 95% of the time, maybe more, that trends end in balances, because the small percentage of the time they don't, like 5 or less, they end in this pattern here called the climax. It just came up here and went, boom. And it just, that should have been enough for like, oh man, because even though this is a strong buying tail, it matches in magnitude this selling tail. Even though it doesn't have that wick, this is an island pattern. It is essentially a tail just like this. It's like boom, boom. The odds were really not in favor of it. The odds were super in favor of after we went up, and then we had the down market. There'd be AKA confusion, like sideways to even down now, because we're in this other phase, and that would have prevented us from reloading a little bit. Now, granted, if you did get in at any of these levels, these are decent levels overall, but we're sitting through this. We need this thing to go back up. Let's look at Tau, because that's the one that's the real driver of this one. And Tau's recovered very nicely. This zone is held very well. I mentioned it in the channel. People wanted to reload here. this is a zone here I didn't really draw, but like I said, once we broke this trend line, we have time frame alignment, and even though we're going to get reactions at these, and there's going to be stories, overall, the sentiment of the market participants is that, hey, uh, these pullbacks are opportunities to get in because I didn't have the guts to get into here because it was too scary. And now every pullback I will. It's like the confirmed entry, and that's the psychology. They're using these opportunities now. So the group that says the group that's FOMOing now is going to overpower the group that's happy in the short term and selling. Because I'm one of those happy in the short term groups that sells on certain amounts of capital, right? But I'm also one of the groups that doesn't. It's simultaneously, but I think the groups that doesn't now are going to be holding through this, and the traders now that missed this move are going to want to get on involved, and the DCA guys are going to want to be using this as an opportunity to get in on moves they missed because we're in that phase of the cycle. Yep, exactly. So this is a perfect reason why we need to look at the markets contextually. There was I think it was a CoinDesk or somebody was really talking about a death cross, this total market cap death cross. Well, if you only look at right one thing in isolation, you're not going to get a holistic view of the market, and a holistic view of the market is the only chance we have in an uncertain environment. Yes, there was a death cross, but if we looked at how it behaved last bull run with the total crypto market cap, right? Before we had the run, right? We had the rally in Christmas of last year, right? We had the double bottom. There was a death crash, there was a bounce, and then we broke, right? Time factor, double bottom, death cross, time factor. That's why I was confident this was going to break because it's the beauty principle. This is advanced stuff. This isn't like, yes, I learned a death cross. Let me flex on everybody and write an article. I don't know how that guy. I mean, well, how did the price behave around the death cross? Well, this time it did the low problem event. So why not with the beauty principle say, hey, double bottom, bounce, death cross, breakout, double bottom, bounce, and time factor that we had. Boom, boom. And I'm telling you guys, it's how it behaves contextually, this advanced way we're doing it, which I've systemized down into that template, which is enough to do it. Like I said, if you have that daily call template and you want to add what I do to it, you would add the pre-market things to the template of bigger picture pattern, the larger time frame bias, which is essentially you doing a multiple time frame analysis, and what else? And then the real time conditions of the sustained momentum, and all the things I talked about, intraday bias and other markets, right? And that's really all you really need. If you're trading the ES, then you add internals, and that's it. So I've kind of distilled this down, this contextual way of looking at it, so that we can have almost like a way of filtering out all this noise because there's a lot of noise in this market. But I was really confident we were just going to get a strong move because of the way this behaved. This is a bull run signal. Let me save this. This one is here. So it's just, always like, I always point out the ones that have the relative strength. It's just, is it random that this AI coin broke out? Who knows? It's, we know the coins that are strong are going to be mirroring Bitcoin, and right? We're in on SUI. Another coin that I haven't been talking about, it's made quite a comeback, is CAS. Okay. CAS was very strong in August, right? And actually couldn't really even break its August highs, but now, strong. These were strong moves. It's on its way up. Yeah, guys. So that's the market overview for this week. Hopefully, you guys caught some of those trades. We had a guy in the channel talk about how he's applied a lot of the strategies to the markets he's traded. He's actually done really well. And I just wanted to point out that, yeah, his hit rate was around, I think, 50% or so. If I'm off by a little bit, I'll go back and take a look. But the idea, I just remember saying, like, wow, like, just so you know, you can become a very wealthy man with a 50% hit rate, as long as you have the psychology to be wrong half the time, which most people don't. Especially if you had parents that were like, you have to get 100 on every test, like I did. You know what I mean? That's insane. Can't make one mistake. Well, then you're not going to be a trader. You're going to go, the fifth. You can have it, but his the thing is that his 50%, 2 to 1, it was way higher than 2 to 1. His risk reward was really good. So if he can keep that up, and imagine if he just tweaked his hit rate a little bit, we're talking really good expectancy. And you can even see like, hey, he's like, hey, I switched. I used to just be like a helpless huddler, and now I've applied these principles. I'm day trading, I'm swing trading. I'm like, he's got stops in, he's doing great. Now, I'm not saying you can't make a fortune with the buy and hold, but don't make the mistake of thinking that I'm not a day trader. I don't need any of these principles in TA that Matt teaches because I buy and hold. Well, don't you think that learning how to do the TA, even if you don't trade actively on the swing or day time frame, would be good for your buy and holds for your portfolio? That's the main point that we're doing it for. I mean, you could see that S&P 500. Why didn't any of the portfolio managers de-risk for everyone? They're getting paid a lot more than me. I don't know why. I gave everyone a signal here. If you didn't, I mean, just think, even if you made the mistake of buying here, I mean, you're still up. It's better than holding through this. You know what I mean? You took off all out here, you reloaded into here, and now you're here. So, uh, just worst comes to worst. Now you have to think about this when you see such a strong move down. Now you're not thinking leg count. The leg count was reversing. Once we broke here, this giant bounce. Now it's the first leg down, second leg down, third leg down in the context of a still bull market where this was a giant zone that I talked about. And we got a great move out of that too. I haven't been as focused on this, but I might start as well being focused on this. I just don't want to get too burned out with how active crypto's been. But yeah, I know there's some folks that trade this, so I'm going to be looking at it as well. But how's everyone's trading going? How's the psychology going? What's everybody up to? I'm going to pause the floor, take a minute. Uh, you got a question? I'm here.
I can talk. I can speak.
Okay, cool.
Yeah. No, I'm actually just peeking through because I didn't cash the gains on a couple of coins on last year, and it's what you said. I was just following the psychology of the buy and hold and not realizing about the potential of the coins that was on its Zenith, let's say. So they got extenuated like Tensor, and the other one was they were very nice profits. I didn't cash on 20K, and that opened a hole on my initiative to keep investing and so on and so forth. But it's all good. I'm keeping the curve of learning, watching you build the zones. It's interesting the way that you describe them. And I'd like to propose perhaps um, um, a recapitulation of how you build these zones. I mean, I have an indicator that builds them, builds the support and resistant lines based on TD counts and momentum and stuff. Uh, it's an indicator that combines RSI with volume and TD counts. So it's pretty interesting, but I don't mix them well yet with your system because I remember when you used to left the lines of previous zone on the charts and I was like confused, but now the charts are more easy to read and I believe that I'm not sure if somewhere in the chat maybe I just have to make and there is so much content on the room if you had a method to build the song already outlined.
Yeah, I mean, I do, the method actually basically, you know, like how we're basically when we're doing our daily call, we do like a top-down analysis. You want to start like, you know, monthly, weekly, then we mostly do it on the daily so we can get a big picture idea. With the zone, I mean, that's important because that'll give you zones and the, you know, all the other context stuff. But what I like to do for creating these zones is, you know, when I used to do them, these master ES traders that were helping me do this, they would make it basically like basically how I used to do it was, and it was just insane. I'm like, I had a carpal tunnel. I was like, I gotta just draw the zones that I think I'm gonna fade that day, and then just I can see zones in my mind anyway. Now I was drawing them for everybody. Then I was like, I don't think anyone understands them. And then I was color coding them. But basically, the way that I draw them is I listed out those basically, you know, I call my support resistance zones. I call those zones key reference areas. And those key reference areas are built on those patterns that I'll list them again because it's important to go over them. Basically, this is a good example of how I drew this, right? I mean, this is a buying tail. We launched up here. And I'm also imagining this is just now a sideways phase. Let me draw a box around it. So I'm imagining now we're in a sideways phase. So anything in this zone, even if my stop's around here, it's a good risk reward because I'm going to get up here. Now, even though I'm more bullish, right? If I have the energy for it, when it comes up here, you're shorting and doing the same thing down here. If you're scared to short on the futures, just know it is the exact same thing. I know it feels different. Just invert this, you know, and just imagine going along. You don't have to short right now. I'm just saying. And I remember when I was like back in the day and I was just getting into this and like 8, 9 years, I was talking to Carl, like, why, you know, why don't we long and short every day? I don't get this. He's like, once you start trading real money, like, and you made some money that day on longs, I'm not saying it's not on sideways days. It's, you know, you should follow correct process. There will be long and shorts, but it's like, you know, it's almost like you have emotional capital too, energy capital. It's exhausting to sit through this as a trader because I was trying to explain to a buy and hold guy because I do all time frames that when you're putting on a trade of this of a higher magnitude in terms of a position size on a day time frame, it's like you're going through the emotional battle of what a huddler would go through at specific moments and times of his huddling. Like if he on the moment he buys, maybe obviously he's going to be losing that day. Rather name a time where a huddler bought on the day that it was the ultimate low. It's like never happens. And you know, he's got to sit through the pain of that. And then maybe there's a reload period where he has to go in again. And then there's the excitement and the emotions of the exit. All that happens emotionally, you know, every time we put in a short-term trade. That's it. So there's that emotional capital. But I guess the psychology of the way that I draw these lines it is based on a psychology too, you know. So, you know, buying and selling tails, also these are the range extremes of the balance. There's a zone that I draw that I wouldn't fade because it's ongoing. It's called the running profile. So there's a zone here, right? Boom. And I'm not going to, you know, trust this because we've moved around it a lot, but it's the idea that if we mature in this balance and we start to launch out of here, trends often start from these things. And the idea is that if this is ongoing and we did break out or break down and spend like a couple of days away from this and then went back and tested this VPOC, then it would be a fade. You see how it's contextual? Like sometimes I tell people here, I list all the key reference areas, which let me see if I can uh, lines in the sand. This is how I find my things because I posted a lot of the system stuff in here that I've written, but yeah. So see if I can find the list. Yeah. So here we go. Buying and selling. These are the key reference areas I use. Hopefully, you guys can see this. Yeah, buying and selling tails. Remember, this can be on all charts, but I like to start, you know, inside out. I start making these zones based on this uh, from this smaller time frame. Inside, okay. Well, where's the first important zone? Well, the low of the day, the high of the day, right? This one here, um, I guess I had that one drawn at the time because I was fading this zone because it was yesterday's low, right? And now it's acting as support again, right? That's why I gave the signal only, you know, to take off half of the runner and leave 12.5% on because you never know because of this zone. It might balance here and break out. I wouldn't ever have the guts to say, hey, this is a great trade, buy it because of the trade location. But remember, if you do, it is a small risk. It's not like you buy here and have a stop down here. You have it, you buy here, stop here, and then take it again. But I'm not saying buy that. Now we got a runner in, right? So going back to this, right? We buying and selling tails, right? Streams of balance areas, high volume nodes. We went over all that. And then, launching points of directional conviction, right? Those are the starts of trends. Previous support, which can become resistance and vice versa. That was important today for, I think, SUI. This one's a little trickier, right? This is something that I see on the daily quite often and help me call the market very well. Lines in the sand that alternate between support and resistance. That's you could just really see its confluence in time. If you can see things behaving there, now don't just take these like, oh, price arrived there, let me buy, or price arrived there, now I sell. Remember, all the other things in the daily call and the things I've added to it is quote the story of how price arrived there. I say, is it tired? Is it restful? Is it ready to go? Is it angry? Just to, you could put some energy behind, or even some anthropomorphic energy into it, and just imagine because like all these patterns, they're people. This is people, mass amounts of psychology, right? So these lines in the sand, right? It's areas where a lot of people have a lot at stake, and we're not so sure what the behavior of that is going to be, but there's going to be something. If it holds, it'll do this. If it doesn't, it'll do that. So it's worth to take a bet. Open gaps, don't worry about that. If you don't trade the ES, it's basically just gaps up on the futures. It's like a launching point. And then, yesterday's high and low and the current day's high and low. That's it, you know? And then, in the daily call, there is an execution like fade a double bottom. Then on top of that, it would be like now there's a double bottom at one of these zones that we created rather than just price making a double bottom not at a zone or price just going down on first test. You could have an added edge when you get that intraday double bottom or double top. So does that help? People, what I can do is let me just forward this to the channel again so you can have that.
Yeah, I screenshotted it, but yeah, I get it. I think I'm more after hearing these calls every so often, uh the vocabulary starts to sink in.
Because you know what's cool about these categories? I wish there was an indicator, and there was times where I didn't want to draw all these in, and now I can visualize which ones I want to draw them for me and everyone in the channel. But the idea is that if there was an indicator here, I would have overlaid it that was as good as just basically everything that's identified. All these reference areas are based on real market structure. And even pivot points and things are going to be some type of derivative of a standard deviation of that. And in my opinion, it still won't be as accurate. So even though it's a little bit more work in the morning, it'd be nice if you could just press a button or, if anything, when I do the zone updates, you can just copy and paste my zones in there. But I'd rather, easily make them yourself. They're not that hard to make. And um, I think they're pretty useful. Pretty useful if we're used in like right. Everything to be used is never in isolation, but it's all used contextually in that holistic fashion. And I think I did at one point list out every single thing in my daily call beyond just like the student template. By the way, I discarded all my old stuff and just went with that student template when I first started working with the corporate. That student template is good enough, really. Just if you really want to do that. But I've added things that have really helped add to it because I can't help but not to see the way that I see it. So I have to incorporate that into it. That's that checklist. Let me get that for you. Checklist. Leader of market. So phase of the if I let's see here. I know it's here. Here we go. System checklist. Yeah, I'm going to forward that again to you to the channel. So this is basically I could make this into a new daily call. I just think it would overwhelm people because I know those guys use Ichimoto's, everyone uses different things. If you have a template, then you could either add to it what I like, and there you could just keep doing add things that you want to do. But yeah, this is basically my daily call that I can see now as a snapshot because there's 4 phases of skill acquisition. When I first did this, you don't really know what you don't know. Then as you're growing, you become, consciously competent. And, the goal really is to do this I've done this so much now, so many times in a row, that the goal is to become unconsciously competent. I want to go into that flow state. And it's really been nice seeing the way the system can be put together in this holistic way of doing it. But yeah, man, thanks for sharing that. And yeah, just let's everyone keep everyone's heads up. I think the markets are right on pace to turn. I think the going into May and June is going to be pretty exciting. We got to see how Bitcoin behaves at this balance area. Certainly, all the news and things are bullish, but always take that with a grain of salt. But yeah, it's things are turning. Let's see a couple of tariffs, a couple of agreements, a couple of positive news. Maybe the interest rates get cut. You never know, and there could be something that could, we are on pace to do that. At least the time cycle chart is right, and at least the charts are pure, and that is something that we can trust more than a politician. So, all right, guys. Well, thanks for coming out, and I'm going to keep you guys abreast on the market. I'll be in the room trading tomorrow. Now, there's always that Give Back Friday potential, but we have to be. That's just one idea in isolation of this checklist, right? So, hope everyone made some money this week and is holding some SUI and keeping their heads up because we got a lot more bullishness to come, in my opinion. And I'll keep you abreast of that. Take care, guys. Have a good one.